Hello everyone, and welcome to today's session where we are going to be looking at some futures and some stocks from the US market. Thank you for your patience. We're a couple of minutes late. As I said this morning's webinar, we're wilting slightly under the heat. We've had the most appalling weather until recently. We've been moaning about it like anything. And of course, we've had some fantastic weather, but of course we're moaning about it now because it's too hot. I mean, really, we're never happy, never satisfied. Anyway, thank you for taking the time to come along and spend it with us while we, as I said, have a look at the market, see what's been going on, more importantly, what's going on now, and even more importantly, what's likely to be happening next. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I've had a quick look through down the list of people who have joined us today. I can see we've got quite a few new names. I know we've got some of our Forex trading students. We've got some of our quantum users, and as I said, I've got some names there that I don't recognize. So if you are someone new, if you'd just like to say this is my first time, it would be lovely to introduce yourself. Right, what are we going to do? As I said, we're going to be looking at the markets, primarily the US markets, and we're going to be looking at some charts, and we're going to be looking at how we can interpret the charts using volume price analysis, which is the relationship between price action and volume. VPA is actually some other elements to it as well, but that is sort of the core concept, and you can find the details, the concepts explained in this book, which is up on Amazon. Together with that book now, there is a companion book which has about 200 worked examples from commodities, the indices, and predominantly stocks in all time frames, because with volume price analysis, the setups that you see on your chart, the anomalies that you see on the chart, they repeat, which is fantastic. So once you get to see a particular pattern, a particular combination of candles and volume profile, then you think, aha, well, I've seen it before. And because our brains have evolved to recognize patterns as part of our reality, you will see it again and you will think, the probability of that pattern repeating is very, very high, and it repeats, as I said, in all time frames. VPA, I know some of you have seen this little schematic before, but as I said, it's the volume, the price. We use candles and the patterns that you can get with candles, and support and resistance. As I said this morning, it's as important. They're all equally important, but I think if support and resistance, it gives the structure to the chart. It tells us those regions of the chart where price is potentially going to pause or potentially reverse, and whether it does or not is actually confirmed with the volume, with the price action, with the candles and the pattern. So you blend all these elements together to help you make a trading decision, and that could be a decision either to enter or to stay or to exit. And on top of that, on your chart, you can upload whatever indicator you want. We've developed some proprietary ones for ourselves that reflect some of the concepts of VPA, and you'll see them on the chart. And then overarching everything is time, not only the time frame that you are trading, but in multiple time frames. And we do actually use non-time based charts, which sounds a bit of a misnomer when I say, oh, we use multiple time frames, and you'll see how we blend non-time based charts, in particular the Renko chart, together with the time charts to, as I said, to look for potential entries, how they help us to stay in, and more importantly, how to actually get out. Right, so that's where we are. Very, very quickly, I just want to recap on what's happening the rest of the afternoon in terms of fundamental data. I don't think there's anything. Today's obviously Tuesday. It's all happened. The building permits and the housing data has been and gone. It's a bit of a mixed picture. The permits are substantially lower. The housing starts are higher. The permits they're slightly lower as well. The housing is one of this particular data set is actually very, very important, because it's a kind of leading indicator to tell us, if the state of the housing, if you have a positive housing market, that is always indicative that, the economy is doing well. Now, you have to remember, of course, when it all went completely pear-shaped back in 2008, but the housing plays an important part of driving the growth, if you like, in the economy, not just for the US, but certainly here in the UK as well. Now, I think the housing markets are quite similar in as much, if from what I've read is correct, there is actually a shortage of the type of housing that people want to buy in the States. And obviously, if you've got low supply, the prices are going to go up. And that is also reflected in some of the stocks and some of the ETFs that have been doing very, very well. And it's understanding and having a grasp of the data that is coming out on a daily basis, and how you then blend that in and link that to what you see on your chart. Now, so that's that. Just very, very quickly, I also use Financial Juice. There is a free version of this one as well. They have the calendar book. The reason I use them, I don't pay for any other live news feed. I find they are, they're sufficient for what I want. Some of you may subscribe to, I don't know, Bloomberg or Reuters or something. And this is really the headline that we want to see. Dow surges 400 points as comeback rally gains steam. We have had exactly the same situation that we had a few weeks ago, where we had quite a dramatic sell-off on the pretext, on the grounds that the virus is once again getting out of control. That is obviously going to have an impact on the economy fully opening up. Is it going to impact growth, etc., etc.? So it's it's like a set of dominoes, if you like. So you had that huge down day yesterday. David's going to look at the charts in a little bit more detail. It did start to come back yesterday evening before the close. There's quite a lot of buying came in just before the close. Futures they were okay this morning. They certainly stabilized. That would be the best word to use for this morning. And now we're back. We're in a kind of market environment. We're also going into the summer months, which tend to be quite quiet, where volumes do tend to die down as well. But the kind of price action that I think is, both David and I agree, we will see more and more, is you will see this moving higher into new high ground, gains coming along but creeping along, and then suddenly something will happen. There'll be a catalyst. I mean, it happened to be the virus. Until a couple of weeks ago, it was inflation fears. That seems to have that's sort of taken a back seat for the time being. But something else might set that off in a week's time, and you will have this very sharp sell-off. And what you then have to watch, the volume coming in, as buying the dip, whatever expression you want to use. Is there going to be a proper correction or a big short? The answer is yes. Is this the one it is? The answer is no. Because of the way the chart is constructed at the moment. We are going to see a major sell-off, but it's not this one. But you just have to be, with VPA, what I'm trying to say is you will recognize it, and you will not fear what you see on your chart, either as an investor or as a trader, because ultimately what kills your success is fear. I can't put it any more simply than that. Right, what's the Dow, what's the futures come back? Futures have come back 420. You have to remember, it's up 400. I think they fell nearly 1,000 points yesterday. Certainly the Dow did. The S&P is up 34. Crucially, We want to watch what the VIX is up to. That's kind of gone down a bit, but it's not really enough. It's when you have such a dramatic day as yesterday, all these other markets, all these other instruments that we look at, they take a bit of time. They've all been thrown off balance, as it were. So they always take a bit of time to settle down, as it were. But for day traders, it's great. It was a great day yesterday. It's going to be a great day today, which is 400 up 400 is fantastic. And we'll have a look. As I said, David's got the YM up over there. Dow, the Nasdaq not coming back quite so strongly, but then it didn't have such a huge fall as the YM yesterday. And in terms of sentiment, in terms of risk appetite, the one to look for is the Russell. This is the Russell on the day. As you see, this is the Russell 2000, the more speculative version of the Russell. As you can see, it's had some pretty dramatic down days, and suddenly it's this is the buying that's coming in. So the market is feeling in a good mood, as it were. So that's the kind of background that we are looking at the moment. What I would like to suggest to you today, I've mentioned it before. This is before we go and have a look at some the stocks that I've been following, and this is all the surface stuff. I mean, the volume will tell you what is actually going on, in whether the move is genuine or not. But at the same time, we have something called, I'm sure you might have come across this expression, called the market internals, and it's a kind of statistical look at what is happening in the indices themselves and to do with stock. And there are various metrics for measuring what the internals are doing. One of them is called the advancers and decliners, and certainly as a day trader, that is something you need to have on your, for an index trader, you need to know, you need to have it on your dashboard somewhere, because if the YM is going up, but it's the individual stocks are perhaps going. So sorry, if you're trading the Dow and you want to know that all the stocks are advancing. Now you say, well, how come the Dow can go up and the stocks are not following it? Well, because that gets down to what the insiders are doing. On the surface it looks like everything is going up nicely, but actually it's not being supported statistically. I suppose market internals are statistics. One of the most interesting one that's been thrown up, and I'll give you the website where you can go and sign up for an email that they send out. They have a paid service, but they also have a free service, and the free service is, it's enough to get you become aware of what is being measured, if you like, and that is looking at, this is for the S&P, and apparently only 60% of its stocks are over the 50-day moving average. So there's a divergence. In other words, it's not all going up to an all-time high. You would think everything would be moving up in lockstep. I know it doesn't always happen, but you would expect to be more than 60%. And it's one of those metrics that people say, in other words, it's going up, but it's not being supported by genuine buying, as it was. It's being marked up, it's being pulled up. Does that mean it's going to reverse now? Well, it had a bit of a swoon yesterday, but that's all it was. It was a swoon, and then up it goes again. Confidence comes back in, and people go back and they end up buying at the top of the market, certainly on an investment. So what you want to do, this is just a suggestion, is head over to Sentiment Trader and just sign up. As I said, there is a paid service, but the email that you get with the free service, I think you may want to pay for the service afterwards. That's fine. If you're going to put a lot of money into the market, certainly in terms of investment or in trading, then this is something that is well worth considering. But what it will do, much more importantly, is explain to you, give you a lot of background in what is meant by sentiment. Their blog, for example, the blog is actually what you have to sign in. But for example, here, this is where the percentage of the respective, and this is so important. This is actually talks about the advancers and decliners. So you may see something on your chart and you read this and it is totally at the other end of the spectrum. You have to reconcile it. Ultimately, as a trader, you have to trade what you see in front of you, and if you have VPA and you understand it, then that will give you the confidence to to take that trade. But you have to be aware of what is going on in background. Right, if you've got any questions, just pop them into the chat box and I will answer them, or David will, either as we're on air or we'll type the answers in for you. Right, what I've been doing, a couple of things I just wanted to follow up. We talked about stock screening and the various, those of you who come along regularly will be aware that I've looked at FinViz, I've looked at Market Beat, and I've also looked at bar chart. And what I finally sorted out with bar chart, which is really very, very nice, is what I've been trying to find is a listing of the sectors, the individual sectors, and how their performance are. I've found them on different other sites, but they're in alphabetical order, which is pointless. I actually want to see which sector has been doing. This is over the last 5 days. You can see it's all pretty negative. So it's, although it's reflecting what's been happening over the last couple of days. But what's really nice about it is it tells you how many stocks there are, and it's in performance. So you can, you can filter on a number of different ways. And what's even better then is you can, I don't know, let's have a look at there's 3,000 there. Let's have a look at hotels and motels. There we are. This is the sector of which there are 15 stocks, and if you click on it, it will actually bring up the 15 stocks. And then you can go and look at it again. So you see within that sector, overall the sector is down, but some of them have come back already. So you think, okay, let's have a look at this one. Let's have a look at the volume. Not enough. The one metric on the volume is you really need to look at stocks that have got, in my opinion, over 1 million. Stocks that have been going up high, have been moving higher, but on very low average volume, the chances are it's not going to be a genuine move. Maybe that's what you're looking for. You're just looking for a quick and dirty trade. That's fine. But if you want something that's a little bit more stable, it really does need much, much more participation. So that's another way. And what they also do is, I've had a look at, is the top 100 stocks. And I think I found the bottom 100 stocks. So, it's a really, really nice way of filtering for stocks. And the last thing on filtering, my last point, is just have a quick look. Those of you who came along would have known me, have seen me, is what's interesting on the retail side is, this is the site mimistocks.org. It's interesting to see where the kind of Wall Street bets crowd have now pivoted to. And what's interesting is they've kind of gone back to more well established. I mean, AMC, okay, that's still up there. Two things. That's the first thing. Nvidia, Emmy, you've got General Motors, you've got Amazon. Okay, Clover was one. BlackBerry. But the other interesting statistic on this Ford is there, Tesla. The other interesting statistic is the number of times that these stocks have been mentioned. If you've been with us 2 or 3 weeks ago, these numbers were very high, and it kind of tells you, are the retail moving away? And those of them who are still in the market, as it were, they kind of moved away from the very, very very volatile stocks that have captured all the headlines. That's what I was trying to say. So again, it's just this kind of statistical information to give you a much clearer idea of what the market is actually up to. Going back to the stocks that the stocks that I have featured in previous webinars, this is the one that I looked at sometime, well, I think was it 4 or 5 weeks ago, David? I can't remember. Brooklyn Therapeutics. I don't know why the chart's not loading. Let's have a look. Let's have a look. Nope. We actually called it one of that's right, there we are. It's one of our fallen angel stocks. It had a lot of volatility, as you can see here. It went from practically zero, $6, all the way to $80. Trapped a whole bunch of people at the top here. Oops, hold on. Let's have a look. Yeah, I'm going to have to pay for this. Well, I don't mind, actually. I think I am going to subscribe to Market Beat because I like the way. The trouble is, I like a lot. All the sites I use all have different features that I find very useful. Anyway, Brooklyn. What I was going to say, if I can get the chart back up, is I've been waiting for that to all the selling to come out, and there has been a half decent bit of buying yesterday, which was such a bad day on the market, but they were buying this particular stock. So I'm going to keep an even closer eye on it, and I think I'm going to pay for Market Beat because I really can't work without it. Oops, a daisy. There we are. Let's have a look. Nope, I'm afraid it's not going to cooperate. I know. Hold on, let me just bring it up on. Where's my Bitcoin? There we are. If you want to read our latest thoughts on Bitcoin, it's over on my site at annacouling.com, BTX. Let's have a look. There we are. Yes. I know, it's ridiculous. Their data comes from TradingView. Right. This has got some of our indicators on here. You can see this ramp up. I mean, I suppose the buying is really here under this, you say, well, that's a down candle, but look at the volume underneath it. If that was a genuine move down, that candle should be somewhere down there. It wasn't. So that tells you that's where this is one of those stocks that, and it's one of the patterns we've talked about before. You want to see a long period of consolidation, really just, there we are, here we are. It had a few attempts to break out, but it didn't fall. It kind of was fairly steady. It kind of just mooched sideways, and then you get this huge amount of volume. Now, if you don't understand VPA, you would see that, and it really wouldn't mean anything to you. Lots of volatility, but the volume is rising, and it goes up and up and up and up. And then we come to this one here and look at the volume, and it's got this big tail underneath it. Oh, that's great. It's going to go, going to carry on to the moon, and it doesn't, and bang, down it comes. But what is interesting about the move lower is in this lovely waterfall, there's really not an awful lot of volume. It's just, and that's what caught my eye, and I think, great, well, that's a nice pump and dump. So catch everyone up there. Everyone's stuck up there. It gets frightened, and it, then it starts to fall. You buy all the stock back. You move into consolidation. A bit more of a shakeout off the volume point of control. Now I'm waiting to see whether, in fact, it is going to, we are going to go back into a half decent phase of accumulation. But the thing to bear in mind now is we're talking about what's happening in the market is we are coming up to earnings season, and I think the earnings for BTX is something like the 8th of August. Earnings that are coming up in the next few weeks, I think, are going to be what is going to, determine whether this market is going to pick up again, or is everyone going to be so frightened that we're going to have another correction, as it were. Actually, trading on a sort of day-to-day basis with stocks, there's all sorts of there's all sorts of platforms up there. I know a lot of retail traders like to trade using options, weekly options, but there is another way, and I have mentioned it before, and that is using MT5, which I know is available in the States, because we have a lot of people who use VPA in the States and who come along to this webinar. The MT5 platform, it is offered by lots of different brokers, and if you look at under their market watch, you have practically got every single well-known stock. You've got Microsoft, you've got all the leaders, all the you haven't got, I wouldn't say you've got all the penny stocks, but it will allow you to trade without having to hold a big deposit, without having to, you're not actually buying the stocks, this is kind of synthetic version, and it allows you to look at the multiple timeframes. You've got volume, which is even more important, and you just look at it and you trade it, because VPA, it doesn't matter this is Duke Realty, it could be the pound yen. It really genuinely doesn't matter. And what I have is I have three, this is my profile, I have three charts. This is what I said about the Renko, the 5-minute chart, the 15, the hour, and the daily. Now, I'm not going to focus on this a little bit more the next time, and this is what I'll be using. I'll be using the MT5 David Scott Ninja Trade Station, and what else have you got up there? TradeStation and Trading View. So, going to keep an eye on as I said, this is a really, really, really nice trend. Really nice trend. We've had a little bit of a couple of pullbacks there. The trend monitor more or less blue all the way, all the way along. Only dipped down into dark blue a couple of times. The volume point of control, we measure support and resistance in two ways: price-based support and resistance through these lines, and also through the Camarilla, but also volume-based support and resistance. And what's interesting with this one is we are now at the outer limit on the daily chart for the volume resistance that has been calculated from the volume point of control. Volume point of control is like the value area. As you can see here, if we go back into the chart, it's where it would have been in this sort of sideways, broadly sideways movement. Then we had the breakaway off the VPOC, and that is, so it's at a quite an important level. There's a lot of volume went in yesterday. I think it gapped up. It actually opened up, gapped up today. And for trading moving forward, this is where your levels come in, and we use the levels, as I said, derived from the Camarilla. Right, I'm going to stop there. I'm going to keep an eye on this. I'll pass over to David. Have you got any questions, David, or is that it?
Hi, everybody. Good to see you, and nice to see a lot of new faces as well. I'll switch that off. Hopefully you can hear me okay. Hopefully you can see my screen as well. Anna's just checking. Brilliant, lovely. Okay, let's have a whiz round, see what's going on. Interesting that Robert mentioned or raised the issue of shorting, because I was actually going to pull up a couple of stocks that we've talked about, analysed on Anna's site some time ago about good shorting opportunities, and I'll touch on that as well. This is on the three of them, the YM, the NQ, and the ES at the bottom on the daily time frames. And then up at the top here, I've got the 5-minute equivalents. And as always, and as we've seen a lot of times over the last, certainly over the last sort of year and a half, there is a great deal of divergence between the three indices. Normally, I say normally, what is normal? Generally speaking, you would expect the indices to move in the same direction. And whilst that is typically true, what we have seen is divergence, particularly with the NQ rallying quite strongly and the other two not moving particularly strongly. You can see the YM here sort of very, very flattish. Same with the ES, whereas the NQ was rising quite strongly in the same period. And equally, what we're seeing now is, again, is divergence in a different direction. We've got the YM here rising quite strongly. We've got the ES rising strongly here as well. And the NQ is really just not doing very much at all. It's flip-flopping around at pretty much par. So it's really not following suit. But we've had this really nice strong rally this afternoon. Since the cash markets open at 2:30 here, just pop this up full size. I'll go on to another workspace, make it easier. But this is basically the open. This is 2:30 our time, UK time. So this is when the US markets open for us. Huge surge in volume as normal. Nice rally on good strong volume, continuing on higher, starting to run out a little bit of steam here. But then you will always see volume very high in this section here. Big surge in volume, and then gradually that volume will fall away. That is just a natural It's a natural pattern. It's not indicative of anything more significant other than we've seen the surge, the floodgates open, all the orders rush in, all the traders rush in, and then gradually you settle into the trading pattern for the rest of the day. So it's not a question of thinking, oh, well, the volume's falling away dramatically. It is falling away, but it's falling away for a particular reason. So we'll head on over to the, as I say, I've got a couple of stocks I want to highlight as well. Just go on to this one, the multiple time frames. Okay, so now we're looking at across, this is the YM, so this is September contract, the mini YM, $5 a point basically. There is also a big version of this, the big Dow, which is $25 a point. There's also, I have to say, if you're just dipping your toe in trading indices, trading index futures, this is where we started 20 odd years ago. We were trading FTSE futures in London through the Liffey exchange, £10 a point. That's where we started. That's where we cut our teeth. But if you're I'm not suggesting you do. It wasn't. I was going to say it wasn't ideal. It wasn't the conventional way of starting. It just happened that way, where we learned VPA and it was applied in that way. We were looking at futures and cash markets simultaneously and trading the various moves accordingly. With fixed stops and pretty tight, and it was all over the phone. And I can assure you, it was pretty stressful because the internet didn't exist at that point where you could just trade off the internet. We had to pass all the orders by phone. They went through to the broker. The broker was on the squawk to the exchange floor. It came back to us, and by the time it came back to us, often we were stopped out literally before the order was even back on the phone. It was that quick, or that sluggish, if you will, in terms of order execution and getting the order back to us. But anyway, those days are long gone. Much quicker now. So I've got 15-second, 1 minute, and 3 minute along the top line, 5 minute, 10 minute, and the 15 minute down at the bottom here. We've had this really nice rally, coming to a bit of congestion at the moment. No great surprise. That's part and parcel. It's just the way of the world. But it's nice to see that we've got the sentiment in terms of the sentiment, broad sentiment. Let me just pull this over. This is what's going on in terms of the currency indices. That's the pound. But these are the important ones for where we are right now. This is the yen. This is on 5 minutes. So as you can see, yen's falling away quite nicely. So that's telling us a lot about sentiment. The yen pairs are recovering. They've been absolutely hammered over the last couple of days, but they're starting to recover now a little bit. And that's the reason why. So we're starting to see yen selling, which is good. This is the dollar. Let's put that out full size. There we go. That's the dollar index. These are both on 5. And really what we want to see for a continuation of this this rally, this recovery, if you like, really don't want to see the dollar rising, because if the dollar starts rising, that is likely to flatten off this recovery in indices, in equities, in risk assets. And that's the reason this has flattened. That was certainly helping equities rally. What we're seeing now, if we're going to see a resurgent dollar, certainly on an intraday basis, that is going to flatten that recovery, and that's why you're seeing a flattening and a reversing of the sentiment that's been in operation so far. Certainly the yen falling, we want to see that continuing. Just move that out of the way again. So that's where we are right now. And a great way to, in fact, let me go and look at those. Let me just pick up those stocks to pick up on the question that, who was it? Robert. Yeah, question from Robert. There are lots and lots of different ways of trading short stocks. This is actually one. This is Southwest Airlines. And the reason I wanted to highlight it, first of all, is one we analyzed a long time ago. Very weak, breaking away from volume point of control. It's been a really nice short for some time. But what's interesting about it is yesterday's price action, which really caught my eye. Ton of volume coming in, gap down, and now I'm looking at it from an intraday trading perspective, because I've got this heap of volume coming in. I've got a gap, and the one thing that you have to be aware of with gaps is gaps often get filled. It's a truism that generally holds. It's so easy for the market makers. You'll see it in lots of different perspectives. You'll see it news releases. You'll see it on the daily charts, particularly on things like Forex, for example. You'll see it a gap up will open maybe on Sunday night, and then it'll close again on Monday. particularly obviously in earnings season, you'll get big gaps when releases come out and then the following day it's closed. It's always something to watch for, and particularly where you get so much volume. So there's a ton of volume coming under this one. It was gapped down from 50 down to around 48 odd, closed a little bit. And so as soon as you see that, you're expecting possibly something to happen. So from an intraday perspective, given what is going on with the indices as well, I would look at it as an opportunity for an intraday long against the backdrop of short, which is the longer term perspective on this one. And it's probably going to go lower, but we will see. We'll see how much this buying has influenced it. We'll also see at the end of the day what this kind of mini rally is like. It may well be something like this. We get lots of volume going in, but the market really doesn't want to recover yet. Clearly, this is a sector that's under the cosh right now. It will recover obviously in due course, but anything in the airline industry, travel industry, it's really difficult times for those sorts of stocks. In terms of identifying this as a shorting opportunity, and I guess to pick up on Robert's point is, and I know this might sound an odd thing to say, but we actually can go through probably 2,000 or 3,000 charts in an evening in a couple of hours, literally flicking them through. We don't spend more than a few seconds on each one, because what we're looking for are particular things. We're looking for particular patterns of price, and then if we see a particular pattern of price, then we will home in on it in terms of volume. So for something like this, when you see you've got a stock which has maybe risen quite strongly or fallen quite strongly, but in this case risen quite strongly, it's trading around a volume point of control, it's maybe starting to channel, you're starting to get some strong levels of resistance overhead, and you're looking at the opportunities below, you're looking at maybe a platform of support. Well, where's the platform of support going to be? What's the point at which this stock is really going to break down and perhaps collapse? And those are the sorts of things you look for, particularly for short stocks. You're looking at the patterns, you're looking at levels, you're looking at support and resistance regions, you're looking at the opportunity where you might take a short. And in particular, as always with short positions will tend to build a lot quicker than long positions. It's just that's the nature of the animal, because the market makers are in a hurry on the short side, they're in less of a hurry on the long side, and that's why markets fall much quicker than they do ever rise. So trading short is great. For those of you who come along regularly, I have a bias to the short side anyway. A lot of my trades are short. If you analyze all my trades, probably, I don't know, 80%, 85% would be the short positions, irrespective. It's just a fact of life. You have to be aware of it. But what you're looking for constantly, and breakout trading for short positions is wonderful. If you have something that's trading around a volume point of control like this, what tends to happen is you could tend to get these channels of support and resistance building around the volume point of control, and they give you these very clear, very well-defined levels at which you think, okay, once the point's broken, right, okay, now what I'm looking for, I've got rising volume here, market's falling away, it's great. Market tries to rally here, what have we got? We get some buying come in here for sure. Market tries to rally, but the volume has fallen away. So, is this going very far? Answer no. So, it's going to carry on down. And that's what you're looking for. But in terms of getting into a short position, it's really very much a case of identifying largely from patterns, indicators like this, giving you opportunities, identifying those breakout opportunities where you've got an opportunity to make some money. And in terms of an intraday picture, this is obviously against the backdrop of, as I say, a very heavily bearish picture. That's where we are at the moment, and the pre-market as well. The other one was this one, which is another one which we did quite a while ago. I think this is Alaska Airlines, another great shorting another great short from a longer term perspective, not a short term perspective. Where's it gone? Where is it? Must be here somewhere. That's the one. There we go. Just move the chat box out of the way. There we go. This is Alaska Airlines, another in the airline industry, and another that you would be looking at from the perspective of the volume point of control. You've got these very strong levels. You've got a level up here, and what you're looking for is that breakaway point, at which point the market says, I've had enough of this. We're now going to break away and deliver that downside momentum. And the The classic thing with all of these is finding these levels. And the other beauty of trading this particular approach, whether it's short or long, but particularly with short, is, as you can see here, you get this protection in place. You've got this very strong level of what was support at this point, then becomes resistance. And in this rally that takes place, again, lots of volume coming in. That's fine. Okay, we see some buying maybe coming in there. But the rally higher, again, gapped up, the rally higher, it's really got very little volume under it. It's certainly not following through, and it hits this resistance level. And the beauty of that is that you've got all this natural protection in place. So if you're shorting this, if you're shorting it in a traditional manner, in other words, your broker is borrowing the stock for you, which is not always the case. You can't always do it that way, but certainly on liquid stocks, your broker should be able to offer that. But be aware that if there's a dividend declared, you will be responsible for that dividend. So just be aware of that. But in a traditional way, that is what your broker will do. If you're shorting something, your broker will deliver the stock for you to short, which is fine. Basically, he'll borrow it from somebody else, another of the customers, which is fine, and on you go. The beauty is in terms of placing your stop loss, because again, the channels are so well defined for you, and it's this protection. So you're getting, basically, the chart is protecting you and giving you those levels to define where you want to put those stop loss levels for the greatest protection. Because to get back through this lot, all this volume that's sitting there, back through here, back through that price-based resistance, back through the volume point of control, and on up through this huge wedge of volume that sits here, that is going to take a massive amount of effort down here. It has to drive it back up through here. And again, of course, obviously a lot of it will be down to sectors. The airline sector is probably pretty weak at the moment, as you would expect. So I just wanted to highlight that. But you can, of course, trade short and long options and using options, which is much more straightforward. You're either buying calls, or you're buying puts, or you're selling calls, you're selling puts. And provided you're doing it with, you're not naked in terms of you're not holding a stock that you've taken a premium on, and you don't hold the underlying stock, then you're naked and you're exposed to maximum risk, provided you do this in a sensible way. If you're buying calls and you're buying puts, that's fine. The total cost to you is the premium. That's it. That's all you're in for. It's as simple as that. Calls rise in value as the market rises. Puts rise in value as the market falls, which I'm sure you know anyway. But options is a great way to trade, as I say, because it's low risk. Your risk is fixed before you go into the market. We used to trade cover calls very, very heavily, and cover calls are where you actually literally cover the option. You sell the option call, and you take a premium in, but you're actually covering yourself with the underlying stock. So it's not a naked position. You have the stock to be delivered if you are called away, if that option is exercised and you are called away. So that's how to sell options in a very low risk way. But generally speaking, in terms of just trading options per se, if you're buying puts and buying calls, the only risk is the only loss or potential loss is the premium that you've paid for the particular option. So I just wanted to highlight those two. Let's have a quick look at Apple while we're here. Let's flick that over there, get that out of the way. Apple's had a big fall. And this is what I mean about gaps. There we go. Gaps all over the place, but then you get gaps on stocks everywhere. That was the fall yesterday. Down here, we're now starting to see that rally back up. And from an intraday perspective, trading exactly the same way as you would anything else. This is on very fast time frames. This is on 1, 2, 3, up to 5, 10, out to 15, lower down here. Trend monitor, blue right across the piece. So, from 1 minute right the way through, we know it's blue. Good volume under here, starting to break higher. If you look at the chart from we're getting to the extreme here of the volume point of control up here. And remember that volume on the chart here acts in exactly the same way in terms of support and resistance. When you get to a low volume node like here, this is moving all the time, but when you get to a low volume node like here, and this region here, where you've got low volume, you expect the market to do that because there's very little in the way of volume acting at that point as resistance. Volume acts in the same way as price-based support and resistance does. It's just as powerful, and it works in exactly the same way. So you look at it through the chart through the prism of price-based resistance and volume-based support and resistance. So when you're coming up to a low volume node from a trading perspective, when the market was coming up here to this level, volumes falling away dramatically, probably very little in the way at this point, you expect the market to do that, and it doesn't require so much effort to actually break through and penetrate to the next level. Let's just pop that back down again. Let's have a look at the other charts here. This is on 15 minutes, much slower. And really just to highlight the point here, this has got both price-based support and resistance and also volume-based. So let's move that out of the way. There we go. If Apple is going to move through from 145 to 146, from a volume-based perspective, there's very little here. It's very, very lightweight, virtually nothing. So you would expect that to move through there pretty rapidly. In other words, take less volume, less effort to push the price through there. Once it gets to up to 146, then we have got some volume here. But in addition to that, more importantly, we've got two levels here of resistance, which are price-based. This is on the accumulation and distribution indicator, which presents these automatically. You can see down here we have these pretty strong. The thicker the line, then the greater is the strength of that particular region. You might not be able to see it. This has got a little 6 alongside, this is a little 4. In other words, this has been tested 6 times. This has been tested 4 times and held. And when you get clusters of them like that, much stronger, they act in concert with one another. So here we've got 2 which have been tested 3 times, pretty strong, acting together. That will be an area of resistance. So in terms of looking at this as a trading opportunity, and obviously you'll be looking at, as Anna said, the advances and decliners, what is going on in terms of the indices. Are they generally bullish? If they are, which index does this particular stock sit in? What's the NQ doing? What's the Dow doing? Whatever it is. That's not to say that all stocks rise and fall like boats in the harbor with the tide, but obviously it's going to help you a lot if the main index that you're trading that particular stock through is very bullish or very bearish. Is going to give it some momentum at the very least. But from a trading perspective, certainly once we get to 145, then there is very little on the chart from a technical perspective to suggest that this isn't going to find it fairly easy to go from 145 back up to 146, assuming all things being equal and assume the current bullish sentiment remains firmly in play. And that is how to analyze a chart from a trading perspective and really look at it from the perspective of, do I want to take this position in the market? You look at the chart, what have I got ahead of me that is likely to cause that price to falter, to run into difficulty? And you look at it from the prospect of volume in terms of on the histogram of the volume point of control. You look at it in terms of price from the support and resistance aspect of the accumulation distribution indicator. And of course, you also look at it across multiple timeframes, because remember that whatever you see on a faster time frame, anything that occurs on a slower time frame will carry more weight. So if you're down on the 15-minute, for example, I think we were on the 15-minute, sorry. Let's change this over to, let's have a look at the 30-minute on here. Change that over to 30-minute, there we go. Okay, right, so let's have a look at the 30-minute. So we're now looking at this from a 30-minute perspective, think, okay, right. We're thinking about taking a long position here, intraday, day trading stock. Similar aspect to the chart here, very lightweight, but then once we get part through 146, we get the volume starting to build, another low volume node. In terms of where this is likely to go, let's say this was on a faster time frame and we were going all the way up here, then where you expect that particular price to really run into difficulty is once it gets past here, because you've got the volume building dramatically, you've got this huge level of price-based resistance coming into play. You've then got even more volume at the volume point of control. You've got the volume point of control itself, and then you've got quite a bit of congestion of price up here. So in terms of how far this is like to run, given this is going to run probably not that far during the day, but if it were, it's going to go through here pretty easily, struggle a little bit through here, come out the other side, and then really start to struggle in terms of congestion. So in terms of opportunity, 145, 147, pretty clean. Anything above that, 147, 148, expect the market to really run into congestion. And that's really how to analyze the chart and how you would look at it from an intraday perspective. Looks pretty bullish at the moment. Let's see what's happening in terms of the indices. Go back over there. Okay, this is on the YM. So the YM is still climbing nicely. I think we were at 300 when we left it. It's now up to 385, nearly back to 400. It's practically recovering. If it gets back to 600, it's practically recovered, all the losses of yesterday, which is what we've been expecting. We saw the buying come in under here on the NQ. It was very muted in terms of its price behavior yesterday. It is recovering along with the others, and that's what the ES is doing, pretty bullish. See what the, just check over on the yen. The yen is falling away. The pound's rising strongly. The dollar is still trying to rally, which is interesting, but the yen is still falling. So that's, positive in terms of, in fact, what have I got over here? Let's have a quick look. I think I've got the pound yen, it's the Aussie yen on there. So that's a proxy. So that's a proxy for risk, which is what we always use. It's not rallying that strongly, but nevertheless, it is rising. And that's what we expect to see. There we go. And the other way of trading this is with Renko, multiple Renko charts, which is so powerful. It's one a lot of our customers do use. It's very powerful, very successful. This is our multiple Renkos on the 15-second, the 30-second, and the 1 minute. And that's it. These are reflected up there in terms of those particular time frames. And remember that each of these bricks, remember this is points we're talking about here. So these are quite chunky sizes. This is 17 points, so that's $85 per brick on here. 27 points here. We've got 38 points over here. I'll just make sure and see this, see if they're actually still correct. Might need to reset them. Click on 15 seconds. So we've got 15 second below, and we've got, we're now setting up this chart above. Okay, let's click that. So that is now telling us we should be running on an 8 brick size. So the market has slowed down a little bit, but nevertheless, that's still $40 a brick. And the Renko optimizer delivers that automatically. It automatically calculates what the optimal brick size should be for this particular point in the trading session and at this particular time. This is 30-second, do the same exercise. Drop down. So this is basically mirroring what's below. So we have a time chart, we've got 12 points on that one, so that's $60 a brick. So we've got a time chart below, which is 30 seconds, so we can apply VPA down here. We've got all our VPA lessons, we've got all our VPOC on here, we've got our low volume, etc. We've got our support and resistance in here, on here in terms of price. And then we just go up and check the last one, which is on 1 minute. See what that's delivering. That's delivering 19, so that's 19 points. So that's over $100 per brick. But what it does is it's exactly the same philosophy as you would use in multiple time frames. It's just using it with multiple Renkos. It's hugely powerful. And of course, what the Renko delivers is the Renko delivers momentum. Because it's independent of time, these bricks will form according to the setting here in terms of the brick size that's calculated. Once it's arrived at that particular change or brick size, it will move on to the next brick. That is independent of time, despite the fact these are aligned in terms of time frame to the bottom, 15 second, 30 second, and 1 minute. The bricks themselves reveal momentum, and it's exactly the same on tick charts as well, which is another terrific way to trade. I know it says tick charts currencies, but I've actually got the YM on here. Again, what you see with a tick chart, because it's a non-time-based chart, is you see momentum revealed. You never see that with a time-based chart. And the reason you don't see it with a time-based chart is because time constricts. If you're on a 5-minute chart, the candle will build in 5 minutes. That's it. At the end of 5 minutes, it will close off. These are all building. The tick charts here are building. This is the 15 second, 30 second, and 1 minute. I've got it the other way up there. It's got the time-based charts across the top. I've got the tick-based charts along the bottom here. And these tick values are coming off here. So I need to adjust these. These are now running at 89 tick. This is running at 233. So it's slowed down quite a bit. And this is running at 377. This is on the tick speedometer. Let's refresh that. There we go. And as I say, what you see with a non-time-based chart, like a tick chart or a Renko chart, is you see momentum. It's also confirmed in this setting here. You can see we've gone to slow, we're running slow, slow, slow. So what it's telling us is at the moment, the market's a little bit sluggish. We've gone to red here. You can see it on the red bar along the bottom here. And ideally what we want to see is we want to see green and orange. Orange is the average, if you like, where it's running at a consistent speed, and it's punctuated with these green areas where the tick volume has actually increased dramatically and gives us an instant signal that we need to pay attention. Just get rid of that. So I would urge, if you've not traded non-time-based charts before, look at Renko, look at tick. They are fantastic. We've developed specific indicators for trading that particular approach. Just go back onto the time-based charts again to see where we're going. 15 second, 1 minute, excuse me, 3 minute. Just go up into this very fast time frame. It's a chart I like to use a lot because I see what's coming up at me on my 1 minute and 3 minute or 2 minute, whichever I'm trading. And again, just to make the point, this, when you get the volume point of control, this yellow dashed line, this is where the market was in price agreement. And when it's in congestion, it also builds these levels with the accumulation distribution indicator. So you get this great channeling effect. And then once the market moves away, it did on good volume here. You can see good spike in volume there. That's what you want to see. It's really just confirming that's a nice move. Then it gives you comfort as to where to place your stop loss. Do I place the stop loss under here? Yeah, could go even deeper as long as it fulfills my money management rules. Under here would be ideal. Under here, if it has to be tighter for you to fulfill those rules. And it's just a really, really nice way. The one thing you have to be aware of, obviously, you've got to be patient because you have to wait for the market to break away from this region. So whether you're on a 1 minute chart or an hourly chart, whatever, you have to be patient and wait. Then you have your levels, and once you've broken away, provided it's confirmed with good volume, you're off and away. We had a nice little 2-bar reversal here. You overlay that one on that one. What have you got? You've got one of these. So down we come. It's what we expect to see. No problem at all. But look at the volume here. Volumes, the price action is falling, volume is falling. What does that tell you? It tells you there's not heavy selling, because if there's going to be heavy selling, then there should be the inverse of that, should be rising. So this one should be higher than that one. This one should be higher than that one still. It should be going up this way. It's not, it's going down that way. So it's telling you that the actual selling pressure is pretty weak. So when you see that, you think, aha, okay, I'm cool. I'm still long, because this is telling me that the volume, the selling pressure, the sellers in the market are not, they're not delivering, they're not following through with momentum. We're not seeing rising volume, we're seeing falling volume. It's anomalous. And that's what VPA is all about. It's about anomaly. It's about whether price and volume are in agreement or in disagreement. And that applies whether you're looking at a single candle and a single volume bar, or whether you're looking at groups of candles and groups of volume bars in combination. And that's just a really nice little example. And that's what gives you the confidence to hold positions, because the hardest thing to do in trading is to actually hold a position in the market, bar none. Because once you get some decent profit in a position, your instinct when you get these little pullbacks, these little reversals here, is I want to close out, take my profit up, I'm frightened. It's a natural reaction. It's the one reaction that kills most traders, because what happens is your trading account will simply wallow and it'll probably slide lower. It's not going to dramatically fall away, but if you're just simply banking a lot of small losses and equally small gains, which are fewer probably, then ultimately your trading account will slide backwards. And that's the problem. You have to hold on to those opportunities which are going to deliver big size. And VPA is just a classical, powerful way of giving you the confidence to hold in and just analyze the chart at the time, and not to be kicked out on sentiment or emotion. Okay, that's all coming along nicely. So, and let's just finally just go back very quickly. Some of the other commodities, this is oil, big fall yesterday. That was all. That was not technical. That was all down to fundamental. OPEC deciding that they were going to agree on some supply cuts. On some supply issues. So that's what affected it. But what's the nice thing about it is we had a volatility trigger. Ton of volume under there. It's what we expect to see. What we're expecting now is either a full-blown reversal or at the very least congestion. We've got a strong platform of support in here. No surprise to see the market going up. Is it going to climb all the way back here? In the longer term, possibly, but all we're looking at virtually over the next few days is certainly some congestion and possibly reversal. Certainly from the depth of the wick there's a lot of buying coming into the market. And that's the reason why we're seeing that. That was all down to fundamentals. Nice moves on oil there. Decent trading opportunities. In terms of gold, that saw some buying yesterday. There we go. And I would urge you to look at daily charts. Whatever you're trading intraday, look at the daily charts. We had some buying coming in here, decent volume under there. We had some buying. It has rallied. It's starting to fall off a little bit now. It was much higher earlier on, but it's starting to come back a bit. Gold has been struggling for a long time, trying to get up to the 1920 through 1920 and on up to 2000, finding it really hard work. The thing that will give that some injection of momentum, well, if we get some actually valid inflation, which is ultimately going to arrive, it's just a question of when it's going to arrive, and if it does, gold will be one of the major beneficiaries. Right, runs right over time. Sorry about that. Thank you, Robert. Fear is my biggest challenge. Right? Yep, it is. And that's what VPA will do for you. It will certainly help you, because what you're doing is, rather than making an emotional decision when you're looking at a chart and you've got a good position in play, you are looking at it from an analytical perspective. So your brain, no longer are you in fear mode, and it doesn't matter if it's only 2 or 3 seconds. It's just enough to give you that window of viewing something from a logical point of view, where you are applying logic to the chart as opposed to a fear emotion. And that's what it's all about. It's one of the great benefits of using VPA in your trading. There we go. Just very quickly to wrap up, just move that out of the way again. This is where you'll find all the indicators. quantumtrading.com, MT45, NinjaTrader 7.8, TradingView, and also TradeStation. I haven't pulled up TradeStation. I won't do it now. TradeStation comes in 2 versions. You've got TradeStation 9.5, which is TradeStation Global, which is driven by an interactive brokers account, which I've got running down here. Just pop it up very quickly. There we go. That's the interactive brokers feed driving the TradeStation. Or we've got TradeStation 10 and above, which is TradeStation Securities, which is driven by the TradeStation data feed. We're doing a lot of work on TradingView at the moment. We've just released the latest versions of, in fact, I'll pull them over very quickly. If I can, just grab that. TradeStation introduced a table feature that was not available when we did the original. Here we go. This is on TradingView. There we go. Just pull those down. This is the currency matrix. So we now have this wonderful table feature, which we never had before, which we now have. So that's been applied to all the currency specific indicators. The one there that I showed you just now, that was for trading cryptocurrencies. That's our cryptocurrency strength indicator, which we've also just released. And we're actually working on a radar scanner, which Anna mentioned on TradingView, so that you can actually put the indicators into a scanning device and actually pull up those opportunities. In fact, much the same way as you would see here on this particular on TradeStation. So it would be similar to this. I need to reload that. But basically, I've got one of the trend monitor and I've got trends up here. You can see you have the opportunity to load all the indicators on there. That's something we're working on. And if you invest in the full package, you get all these indicators free of charge that we develop in the future. It's just the way we work. We've always worked that way. Remember with TradingView also that it's not Windows based. So it's you can run it on a Mac, you can run it on mobile devices, you can run our indicators quite happily there. You don't have to have a Windows environment to run them in, as you do with MT45 and NinjaTrader as well. So that's where you find all the indicators. You can find by one, groups. If you do buy one, or you buy anything from us, we always give you a full credit for that. So if you decide you buy one, you want to upgrade to a full package, or you want to upgrade to an education program, we always give you full credit for that. This is the Forex program, Quantum Trading Education. It is called the Complete Forex Trading Program because it is just that. And curiously, we have a lot of stock traders on here now because they've come to the realization that the Forex market is at the center of the world in terms of the financial world. Because if you think about it, where risk sentiment is just risk on and risk off, that's all it is. It's the flip-flop between money chasing higher risk for higher reward or lower risk for lower reward. That's all that happens. It's just a constant seesaw. All you're seeing today is a flow out of lower risk asset classes and into higher risk, whereas yesterday it was the other way. And that's all it's about. But what you've got to understand is that at some point, those assets that were bought yesterday have to be converted back into cash. Where does cash go? Through the Forex market. So the Forex market is the hub, it is the kingpin around which all these other markets of commodities, equities, bonds, they all rotate around the Forex market, and that's why it's so important. The funded program we've added on to allow our students to trade our money. You can trade our money up to $2 million. So it's not a risk to you. You are trading our money, and we did that for one simple reason, because we wanted to give our traders an upgrade path to actually put that knowledge to use that they learn in the program and can apply on the in the funding. That's labs. That's labs.quantum.trading. That's where you'll find all the updates on the latest indicators. And finally, on Anna's site, AnnaCoulling.com. This is where you'll find all the posts. Bitcoin, very interesting, really interesting point at the moment for cryptocurrencies in general, but Bitcoin in particular. You'll find all the books. They're all up on Amazon, either in Kindle or in paperback version. All the links to all the various sites as well. So that's it. Thank you very much for coming along today. Hope you've enjoyed it. Hope you've perhaps learned something that you didn't know before. And if you have any questions, always happy to answer them. Anna at annacoulling.com will find Anna, and myself, you can find David at quantumtrading.com. So you can find us both in that way. Thanks very much indeed. This will be going up on YouTube as usual, and you can watch it again there. So thanks for coming along. Enjoy the rest of the trading day. Enjoy the rest of the trading week. Stay safe as always, and we will be back again next week. See you then, and bye for now.